Welcome to Trading Lounge and the gold and silver report for the 18th of January. Starting on the monthly chart here, we're just keeping it simple. We're looking at wave 3 here with a wave 4 here and heading up for wave 5 here. So in a nutshell, we're looking for a classic trading levels pattern across this 2000 here. Now I have adjusted my wave 3, so this wave 3 here, so there will be a slight difference in the count. So coming onto the weekly chart here, let me just pull in here what we've done. So from this wave 4 here, we're looking at wave 1 and 2 and 1 and 2 here, and then 1, 2, 3, 4, 5 for the third wave and the fourth wave. And then what I've changed is I've changed this count here from wave 4 here going up to wave 5 here of 3 here, and looking at an ABC here for wave 4. Now we can investigate this here and show you what I've done with this and how I've done that. Now secondly, the main point here is that this grey box through here, the bottom end, well, let's just call it the 38.2% retracement level, which comes in around the 1700. We can refine that in a moment. And yeah, so we're still looking for more downside here to come for this, unfortunately. Now obviously it's going to shake a lot of the longs out, but as you know, if you've probably heard, the Morgans have been fined $1 billion for manipulating the market, so they constantly do that. Plus, I don't think they're doing it at the moment apparently, but there's still 4 other players doing the same thing. So basically it's all paper money in the futures market. Same thing's happening with Bitcoin as well, I noticed. We'll be talking about that in the Bitcoin thing. So we can see that the move down through here has seen increased volume as well for this. Now there's 2 ways that this can play out here, and this is what we're going to talk about today. So from this weekly chart here, we're looking for the daily chart. So with the daily chart here, I'm just going to talk to you about 2 ways it can play out. Now firstly, this current low through here, right, for this to play out like this here, this low here needs to be breached. Because what that will do, that will create from the top here, that will create 5 waves down. So just 1 and 2 in here and 3 here, and wave 4 here that we talked about last time we spoke as 38.2% retracement level. So if that is a wave 4 and we do make a new low here, that's going to bounce off this number here, the 18 here. So once we'll have 1, 2, 3, 4, 5 down here. We'll take a closer look at this in a moment though. So if this low gets broken, that means we will have 5 waves. If we get 5 waves here, then we're going to get a 3-wave counter trend in this move here to the 50-60% retracement level, and then we're going to get another 5 waves down here. Now it's possible to count this down here as well. We've been working in lots of 3 waves here through all of this, so it's possible to have this as an A and a B and a C wave down here to the 1720 mark, and then push off from that point. Now if I put this, just copy this for a moment and put this wave A over here, then we're looking at an A wave here, an A and a B and a C wave here for the B wave, and in that case we would have 5 waves coming down. So when we come down to this low here, we could have 1 more bounce and then down again. So that's the difference between having a 3-wave structure as an A and a B and a C to finish this off, or we're going to have 5 waves down. So we'll just leave them both here, and it's just something that we're going to have to work through, that's all. So we can buy off the low here once we can count 5 waves down here. We could buy off the low, but we'll also just have to monitor, and if we see overlapping wave structures, then we'll call it in as a corrective wave 4, and then we'll have to pull out and then move with this move down through here as wave 5. So we'll just see how that plays out, but they're the two scenarios we played out. Now there is a third scenario, which is on our website as a triangle pattern. And as a triangle pattern, it pretty much does the same kind of thing in a way. So we would still see a move down here. Well, not really. We would actually see this low stay in play, and we'll see a move up here. But in a bit of a nutshell, we would see it play out as a structure like this here, coming down to the previous lows here roughly, and then moving off from that point. But we'll keep monitoring that on our website, so I don't need to do it on the video here. So these are the two patterns. So we'll take a closer look at this on the intraday 4-hour chart, and I'll just bring in a little bit more data here for this. So there's different ways to to count all of this, but in a nutshell, wave A, and then we can look at this as wave B here as a triangle pattern through here, as an A, B, C, D, and E here for that, for wave B, and down for wave C to make wave A here. And then from wave A here, we go an A wave, a B wave, and a C wave here. Because this move down through here really counts quite nicely as a 3-wave structure, and then in here we've got 1, 2, 3, 4, 5 here as an impulse wave. So it counts nicely as an A wave, a B wave, and a C wave here. Even this counts nicely as an A and a B, and 5 waves up for the C wave here. So it's just another way to count it. The other way to count it, of course, is having this A wave here sitting over here, and the difference that will make will play out down here, and also as if this ends up being 3-wave structure here, then it'll be a double WXY. You know, I like to keep things rather simple as ABCs and 1, 2, 3s, but still, if it plays out that way, we'll have to acknowledge that. However, in this stage here, we can clearly see here that we've got down for 1, back for 2, and down for 3 here. So the line across here was the 38.2% retracement level, our target to the upside. So that's been met, but we don't know if we've got 5 waves down here just yet. We will need to see this drop here, so wave 1 and 2 here, and 3 here, and 4 here, and 5 here, dropping down to here. If we drop below this low here, then that means that we will have 5 waves down here. And if we do have 5 waves down here, that means we're going to have a counter trend in 3 waves here, possibly back to the 50-60%. Gold's got a habit of going to the 50% rather than the 61.8%. But also too, we need to gravitate over to the closest, largest number for psychology reasons. So that could bring us in, well, 50, 72. We'll see. We'll get it, but we could go into all the trading levels there as well, all the minor levels. Well, this 1800 is a minor level, so anything above that will be sub levels. So let's just see how that plays out. But yeah, whatever this rally is here after 5, if we get 5 waves here, if we get 5, because if we don't get 5 waves here, that can just push straight up back into this space here and then drop from that point. That's the triangle pattern. But if we do get that little drop there, which looks kind of likely, then we'll get that 3-wave counter trend, and we can look at this from wave B here down to wave C of Y here, and that will be in 5 waves here, so we can track that 5 waves, or it's going to be wave 2 up here, and we'll come down for wave 3 here, and then 4 here, and then 5 here. So that's what we're up against here at the moment. So I'm just going to bring silver across, also in the same time zone as this, as 4 hours. Now, it will be labeled in the old version, so it'll be a degree smaller in the count, but the same thing applies here. So if this low is breached here, right, we don't know if that's going to be the case, but if it is breached, let's just assume that it is, then we're going to get a counter trend in 3 waves that can pull up to the 50-60%, wherever that may be. But sometimes it only comes up into the supply zone here of the wave 4 of 1 lesser degree, so we'll have to be a little bit mindful of that. And then we're going to see another 5 waves down. Pull this across here. I'm also looking at silver possibly being a larger wave 2 rather than a wave 4 there, but that's something we can talk about next week. But either way, we're going to see if this gets breached here, right, we're going to see 5 waves, be a retest there. We're going to see 5 waves down for wave 3 here, and it could probably move up from that point there as well, depending on, well, we've got this nice trend channel coming through here now, so we're going to be ending up down at the $20 mark there, unfortunately, but wave 4 possibly and wave 5, but the same. This wave 3 low is going to be really important, and we'll line that up with gold as well, because that may be the low there at that point. So we've got a bit of work to do down the bottom, but if you're going to trade, then this is the trade here. Now the trade would be, first of all, we need to confirm things, so we'd need to look at this as 1 and 2 and 3 here, back for 4 here, and we want to see that low breached. As soon as that's breached here, then there'll be a counter trend in 3 waves. And in those 3 waves there, you can first of all just draw a line through that. This wave 2 rally here, or wave B rally, wave 2 or wave B, either way, doesn't matter for the time being, that will be a 5 wave structure, 3 wave structure, and a 5 wave structure. So a 5, 3, 5 structure in that particular point. And we'll hone in here and we'll try and get this short here. And then, yeah, if we've got that 5 waves coming down, then we can short in this box over here at that point, that 61.8%, but we'll refine that, we'll get that right, so we can look to short. I'll just turn that box green. That's not the one I wanted. Let me just, a bit complicated. I'll do that. New platform, new things to learn. So, but yeah, so you can short it in that box if that low is breached here. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.